Hi, welcome back to this video. My name is Austin, and in this channel we talk about personal finance, investment strategies, as well as lifestyle. We just finished the candlestick patterns, and in this video we're going to continue on and talk about trends, channels, supports, and resistance. So what is trends? Trends are the core of technical analysis, and the principles is that the price always move in trends, and historically history tend to repeat itself. That is the core principle of technical analysis, and that's why we analyze the past trends. So what is a trend? Well, it is essentially the direction where the price is going to go to. In trends, you don't just see price always going straight up, and they fluctuate up and down, maybe while they're moving upwards, or perhaps they fluctuate up and down while they move downwards. So let's take a look at how this really looks like. Right. In this slide over here, we can see the uptrends, side trends, and downtrends. Let's talk about uptrend first. As we can see, it doesn't just go all the way up. It actually fluctuates. The blue line represents the trend itself, right? Or the prices, how it is going to go. You'll see the prices go up, and then they fluctuate down, and then they fluctuate up again. So what we call in technical analysis is that these peaks, these highs, are called higher highs, whereas the lows are called higher lows. Why is that? Well, because each high after another is becoming higher and higher, whereas the lows, they're also becoming higher and higher. Even though, yes, the price on a shorter time frame might be going down, but the trend itself, it is fluctuating, but it is going up. On the contrary, if a dip happens and the price actually goes lower, then you'll see lower highs and lower lows. And side trends are pretty self-explanatory as well in technical analysis. They do say the trends tend to persist, right? It means that if the stock is in an upward trend, it's likely to remain an uptrend. It doesn't mean that it will stay in an uptrend forever, but it is much harder to break out of a trend than staying in a trend. So let's show this, roughly how this might look like on TradingView. So in here, I am just using Microsoft as an example. It is not a perfect uptrend, right? But I wanted to show an example that's not perfect to kind of give you guys an idea that, trend is part of the analysis that we can use to gauge what is the structure, what's the movement of the prices, but it doesn't ultimately determine your strategy, right? So in this case, we see Microsoft, and this is between a period of October 2020 to about November 2021. In TradingView, you can easily draw a trend by choosing the trend line function and draw something out like this, right? However, I already drew out one, and usually how you draw a trend line is that you find the peaks. So the peaks in this case are over here, over here, over here, over here, etc. And the lows as well. So these are the lows. So what you do is basically you draw a trend line on the lows, and then you draw another trend line on the highs. And you can see the price is fluctuating. Microsoft's stock price is fluctuating within these trends, right? And this is really interesting because it forms something like a channel. And this is the next thing that we're going to talk about. The channel is an area where the stock is fluctuating in between. And since we mentioned that the price do not just keep going up, there will be an upper trend line over here, and there will also be a lower trend line which touches the lows. So this means as a trader, even though you know the stock is in an upward trend, right? You probably don't want to buy the highs. Sure, you can maybe still make some money out of it, right? Let's say if we take from this high to this high over here, it's still a decent 15% gain, right? However, if you wait for the lows to occur, that's a additional 5-6% just from one fluctuation, right? So what you want to do as a trader is that if you're looking to purchase a stock and you see a trend, you probably want to purchase a stock when it is nearing the lower trend line. Versus if you want to sell a stock, then you probably want to sell it at the upper trend line, right? So this is quite important. Understanding the trend and knowing what the channel looks like. So we also notice another thing that's really interesting. These channels, the reason why they form is it looks like the price never breaks through the upper trend line. And it also doesn't really break through the lower trend line. And this is something called a support and a resistance. So you may hear these terms very often. Support, you can imagine it as it is supporting the price. It is supporting the price from going any lower. So the lower trend line usually represents the support, versus resistance is resisting the price to go any further up. So usually the upper trend line is the resistance. This is a really important topic because generally buyers and sellers, they look at these supports and resistance and determine when they want to buy or sell. So again, I mentioned that you probably want to, if you want to purchase a stock, you probably want to buy it at support, perhaps a little bit higher than the support so you can get your orders in. And you probably want to sell a little bit under the resistance so you can actually sell your stock. So this is something that's almost the fundamentals of technical analysis, understanding what is a trend, understanding what is a support and a resistance. I want to show another example. Let's actually go to Bitcoin, right? Of course, we all know that Bitcoin has been dropping quite a lot in the past few months. However, we can use Bitcoin as a pretty good example and see what are some of the major resistance and what are some of the major supports. Probably support is something that are more interesting right now because the price is dropping. We can see that these big areas, the trend line that I just drew around 30,000, it was a major support because the price has dipped to it twice, and both times it has bounced back up dramatically. And this means that buyers are looking at this trend line and they're looking to purchase a stock back at this trend line. However, during May, when the price actually dipped below it, and you can see that it didn't just dip below it within one day. It fluctuated on the top of this trend line for quite a long time, on top of this support for quite a long time. When it actually dipped all the way down, it basically broke through, and it only stopped around the next major support, right? Which usually when you look at a support, it is an area which was also previously a resistance. So as you can see in 2017, the 20,000 mark was a huge resistance, and same with over here in November 2020. Hence right now we are also facing some fluctuations up and down for quite a long time, with a nice bounce just recently on Bitcoin. So these are the areas that you want to look for if you maybe want to look at purchasing a stock. And then pair that with, for example, the candlestick pattern that we look at, and later on with more technical analysis techniques that we will learn, hopefully you'll develop a strategy from that. So why do prices bounce between support and resistance? Well, you can think of it as almost part of psychology, right? Humans tend to look at short-term trends and expect it to last. When Bitcoin was going all the way up, all you hear are positive news. Elon Musk, everyone was talking about how great Bitcoin is, and nothing but good news were going to people's ears. But then now all you hear about the Bitcoin are all these crying news and about how trash it is, right? So this kind of just determines that, people believe trends persist. They believe what's happening right now determines what will happen in the future, and they don't look at it in a longer time frame. And because everyone are able to look at this trend and they always trade in favor of it, for example, not only you are looking at these support and resistance, right? Many people are also looking at these supports as well, and they also think very similarly. And because of that, if many buyers are looking at this support, then when this support is hit, is more likely that the price will bounce back up because there will be more demand during these major support areas. So I hope this video has helped you understand about trends and supports and resistance. We'll talk about a few more key topics on this area. And if you like this video, you'll help this channel tremendously if you subscribe to it and like this video. Until next time, thank you.